Joining me now for the Trader Rundown is Alan Knuckman, a Bullseye Option, here to take a look at the overall market conditions. And what do you think was fueling yesterday's rally?
A relief rally.
It was a relief?
Path
What
of
was
least
the relief?
resistance is still higher. It's not over. It's not over. Every sell-off, the market's bounced back. More important, I think, is the decline in the VIX. The vol fall, Friday's high was around 1750, so that's about a 30% drop. We've seen this before. Every time the VIX pops up, it gets whacked right back down.
Let's take a look at some of the areas. I know that you look for beaten down stocks, but in this case, you're looking for a beaten down index.
Sector, yeah, I'm looking at the Russell 2000. The IWM has not participated in rally much this year. On Friday, it was essentially unchanged in 2017. It's been trading between 130 and 140. So leaning on that 135 level, I'm looking at a November call to give myself some time for this market to play catch up to the others.
So what do you anticipate here with this trade?
Well, I'm looking forward to bounce back. If we get back to 140, then that target's 145. So I'm looking at the 130 call. It's a more expensive option than usual. It's about $1,000. Now I'll put in a stop loss at half of that because mathematically, if an expensive option loses half of its value, typically the market's either gone the other way or you're running out of time. So I'm really risking $500 here. And if we get back up to the 145 level, the option will gain about 50%.
Ellen, I noticed you're playing the IWM, which is the ETF of the Russell. Why not just play the Russell, or is it tracking and this trade could go both ways?
It's going to track what the Russell does. This is the vehicle that most efficiently tracks the small cap index. And I like the option, obviously, because a smaller move in the underlying will give me a big payoff in the option.
I knew there was a reason. Thank you.